Gav. I don't know if I'm going to be recording this. I'm getting an idea.
Yeah, I'll jump on that tape right now. So, yeah, I thought we were going to record it, so I was just looking for that stuff. But okay, Scott, also.
Wait, what you say is more important than I do anyway, so.
You got all the nuts and bolts. I'm just all fluff, as we know.
Yeah, just record the good stuff. That's all right.
There you go. Okay, shoot.
Yeah, so anyway, NASDAQ obviously the big leader in the market here, although we do see some strength in the XBI and the IBB, which is the biotech space, which is helping give that technology, biotech weighted NASDAQ some nice strength here. If you go over and take a look at the chart of the QQQ, had a really nice breakout over the June highs there today. Kind of, we look at yesterday's price activity, which was kind of a bearish gap in the morning, but it didn't really lead to any sort of aggressive sell-off. Taken in context of the prior day's activities, which was a strong uptrend rally off the 50-day moving averages, series of higher highs and higher lows. Yesterday was really just the first pullback in this July move higher that we've had, and it really didn't show any sort of aggressive follow through to the downside today. In fact, once we saw prices opening up and challenging this morning's highs, you knew you could have any sort of short positions or people who were very bearish on the market as of the last 2 days here, looking for some sort of corrective activity, that they were going to be trapped here this morning. And then as buyers kind of stepped in and took prices up to fresh highs on the week, you had that squeeze developing. And again, mostly a lot of this is driven definitely from software space. You take a look at the IGV ETF and get a nice clean breakout over those June highs there this morning. FDN, which is the Internet ETF, nice little breakout from a 2-day pause consolidation pattern, which is challenging its June highs. HACK, H-A-C-K, which is a cybersecurity ETF, and you can see that that's got a nice extension today. Did not clear its June highs, but it's definitely challenging them in today's thrust higher continuation of prior day's rally here in July. SKYY is another one. That's a cloud computing ETF, SKYY. And again, a nice clean breakout of that one right over that 55 resistance area going back to June. So just really good relative strength overall. And then finally, just take a look at the XLK, which is the main technology sector ETF, and you can see that that's challenging its June highs right around that mid-72 area as well. So as for some leaders out there on the actual gainers, let's go through some point gainers, and most of them are going to be in that space right there. We posted some of these leaders from the software space onto our site a little earlier, but I'll just call them out here. There's quite a handful. Baozan is an interesting one. I'm just going to go through the charts that I think are pretty significant, potential breaking out of a resistance type of moves. Baozan's interesting because we've had this one. I think it's still part of the emerging growth focus list. I gotta go back and see. I'm not sure if it slipped off this week, but it did correct off the June highs about 20%. It's the only reason why I think it might have slipped off the emerging growth list as of late. I have to go back and look, but it's been consolidating right around that 50-day moving average the last 3 weeks or so, and pretty constructive behavior. Each time I tried to dip and break down below the 50-day moving average underneath that 55 level, it got bought up. So here we are today with a nice 3 3/4 gain, clearing 2-week highs. This one might be on the move again, back to the upside. So Baozan, BZUN, is definitely one that you would want to take a closer look at. Okta, OKTA, this is another one that has been on one of our focus lists as well. Again, I can't remember if it's still on the emerging growth focus list or not, but I've heard Tech T talk about this one for quite some time. But this is a really nice multi-week pullback consolidation pattern, recently holding the rising 50-day moving averages and now showing a broken downtrend today as it trades up about 3.5 points. So OKTA is looking pretty solid as well. Spotify, I mentioned the relative strength in this one yesterday, right up against the June highs. It just jumped right out of the gate this morning, and it's up another 5 points, all-time highs for that one. So looking pretty solid there. Biotech, obviously we have some strength in Biogen. It's trying to maintain the strength that it started to have to recreate with the gap up last week. I have Illumina, ILMN, that's breaking out over the 300 mark today, so that's a really strong biotech name as well. And then even Vertex Pharmaceuticals, VRTX, is one that's on my radar, up $3 here. Mind you, I do tend to focus on higher price stocks. I believe higher price stocks reflect quality, and I just tend to stay away from the lower price single digit ones. I believe that the quality names are the higher priced ones, and that's where you're going to find most of your mutual funds and pension funds and institutional money going after the higher quality names in the market. So this is just why I tend to focus on these higher ones. Again, I'm also prefer to trade options when I swing trade a lot of these, so it's you get a little bit bang for your buck with the options there. But these are the really good momentum names. Amazon, obviously up 40 points, new highs coming right into that 1800 level for the first time. PFPT, this was an interesting one that popped up here. I saw Trend Tracker has this in his swing portfolio. Computer services technology name, so that's looking pretty good. We did see nice follow-through breakouts in MasterCard as well as Visa, up trading at, I think those are new highs for those names. Speaking of credit card companies, this, I think it was SYF came out, and it looks like something about Walmart not using them as one of their credit card carriers. That's SYF, and that stock got hit pretty hard here in this early afternoon for about a 6% loss. Something about Capital One, COF buying Walmart's credit card business, I believe it was. Something along those lines. You could search the site for some more specific details on that one. We did get a little bit of industrial strength here. I do see Lockheed Martin is trading up about 6 points. We obviously have Boeing up about 5 points. Northrop Grumman is doing pretty good too, up 9 points, currently challenging its 250-day moving averages. But again, these are stocks that we all know that the aerospace sector has been hit pretty hard here in the latter half of June, but seems to be making a little bit of a comeback here. So just one of these groups that you might want to keep your radar on. Take a look at the United Technology chart too, UTX. This is pretty interesting tight range going on for almost a month and a half, 2 months, right along that 50-day and 200-day moving averages in the 124 to 120, let's go with the 128 zone. So definitely a very tight, narrow range going on for UTX, so you're going to want to keep a track on going forward. Let's just jump down to some internet names. I see Baidu is the leading point gainer today, up 10 points. This stock, it was struggling there in early June, right around the 200-day moving averages. I know multiple people were interested in this one. I believe we did highlight this key support level at 240, which was based on that late April gap and the May lows that were being challenged right around the 200-day exponential level, 240, 239. I know from a couple feedbacks, people were interested in buying in that one, so they're sitting pretty with that one, especially as price trades up 10 points towards those June highs there. Google, obviously, big gainer today, back near the June highs. Facebook, a new high for Facebook, but not really seeing a whole lot of thrust. It is up 370, but I don't really particularly like trading Facebook. At its highs, when things are going well, it just seems to be more very steady type of movement, whereas when it's against the ropes, it seems to be a lot more volatile and more activity. That's usually when I attempt to trade it. I think finally software names. I'll run through this and then I'll bring Gavin in here. So there's a ton of software names that I'm showing some pretty strong gains on, including Adobe. Adobe, nice pop over the 250 level, making its way back to those June highs. We have Autodesk, ADSK, that's up $5, trying to make its way back to the June highs as well. Obviously, we all know that Computer Associates is a potential takeover candidate from Broadcom this morning. AVGO, which traded down to about 18-19%, cracking the 200 mark, and then started to bounce thereafter, which we participated in. EPAM, this is interesting. EPAM is a nice little breakout to new high territory over that 130 area. So nice looking chart going on there with some upside momentum. This was a good one too. I think Trend Tracker also mentioned this one as a holding of his, is MongoDB. That's MDB. MongoDB up 4.5 points today, making a nice jump back up towards those June highs. This is one that Gavin and I, we missed out on this one. We were both talking about it mid-June, saying if this thing was to pull back below the $50 mark, and its 50-day moving averages right along the May high and the March high, right around the 46 area, we definitely would be buyers of this one. And Gavin did all the research and the story on it, and he pretty much convinced me to be watching it. And it pulled back in late June, and we were looking for that little bit more of a thrust down there, and we kind of missed out on it and started to just grind higher here in July, and then boom, here it is back up near the highs. So at least Tech T caught that one, while Gavin and I slipped and missed out on that one. NOW ServiceNow, nice one up there, 7 points, new high breakout over that 187, 188 area today. Pretty good price action going on there. Red Hat making a comeback, up $5, right up against its earnings gap from about 2 to 3 weeks ago in late June. So this is going to be an interesting inflection point for this one, right around that 149, 150 area. It's holding up for now, but I'd be a little bit concerned. I wouldn't be too surprised if the market pulls back in. This one maybe slumps back in underneath that bearish gap. A lot of people looking to break even on this one for sure, given the fact that it was a strong performer ahead of that gap. So just something to be careful out there on that one. Splunk, I did see Splunk, SPLK. That was looking pretty good as well. Making a nice little bounce back. Team, T-E-A-M. This is Atlassian Corp, I believe it's pronounced. Atlassian is an emerging growth stock, if I recall. Nice steady uptrend, but good activity today, trading up almost $3 to bring those June highs into play after a little bit of a recent consolidation and pullback. And then they do have Trade Desk is up $3, TTD, the Trade Desk, and not breaking out yet, but man, this is some really narrow range consolidation going on here the last couple of weeks, with price just kind of rises, testing its rising 20-day moving average and bouncing right off of it. And I definitely have TTD on the breakout radar over that 95 area. So something just continuing to pay attention to on that one. I know Trend Tracker is a fan of that one for sure. I do have Twilio looking pretty solid as well. That's TWLO. I'm not really sure what Twilio does, but a little bit of a breakout there over the $60 mark, which will bring the June highs back into play. Workday, WDAY. Nice $5 gain today, lifting back above multi-week resistance. Looking pretty solid on its comeback here. And then let's see, what can we end on? With PANW, Palo Alto Networks. This one was strong right out of the gate there this morning. It started to push against the 215 level. I believe it was highlighted on the site as it came into those June highs around 215, 216, leading stock and liquid momentum. I got shaken out of this one earlier in the week on that dip back below 207 and missed out on this gain here, but nonetheless, pretty strong price action going on in Palo Alto Networks. So again, tech definitely is the place to be for today. didn't really see a whole lot going on here. And again, I think a lot of traders are just kind of waiting on tomorrow's earnings reports. So with that said, if Gavin's around, maybe you can kind of jump back in here and give us a preview on what to expect from some earnings and on the macro front.
What's up, Scott? We're back here.
Cool. What's up?
Nothing. You want to take a quick 5-second break, get yourself a little water, and I'll go through the macro, and then we can take a look at the earners?
Sounds good.
Okay, so taking a look around, there are a few things of interest here that we can expect out. We're going to cover the U.S. front first. And with that, tomorrow morning at 8:30 a.m., we're going to get some more information on the inflation front with June import and export prices due out. We saw CPI run a little bit lighter on the month-over-month, but the year-over-year numbers still remain pretty strong as it was up plus 2.9% on the headline number, which was the highest year-over-year number since going back to 2012. I believe it was January of 2012. So we're going to continue to monitor the action here. Just take a look at some of the priors on the calendar there. The prior headline for import prices ex oil, which is the number that we usually go off of, was plus 0.2% month over month, and the ex ag figure was plus 0.5%. Export prices ex ag, that is, plus 0.5%. So we're also going to get the preliminary look at the University of Michigan consumer sentiment number for the month of July. We're looking for a small downtick from the June number, 98.2. July, the consensus stands at 97.8. So a small pull down, but this is coming off some pretty high numbers historically. So keep that in mind as we're going through. Then other items to watch out on the U.S. economic front, we got the Fed monetary policy report tomorrow. Curious to see if we see any expansion on commentary around the yield curve, which has certainly been a hot topic as of late, or not as of late, it always is, but certainly been a little bit more in focus as that flattening's come through. But I'm not sure if there's going to be anything market moving in this, but we do want to keep an eye out for it just to see where the Fed's head's at on their monetary policy report. Then we're also going to have Atlanta Fed President Raphael Bostic out. He's generally viewed as being more on the dovish tilt for things, and this comes after the Harker comments today where he noted that the baseline scenario for him, now he is a non-voter, Bostic is a voter, but he noted that the baseline scenario is 3 rate hikes in 2018. And then finally we got the Baker Hughes rig count due out at 1 p.m. Eastern Time. Moving on to the international side, the big number to keep an eye out on will be out this evening when we get the China-US trade data out. Obviously a hot topic for the markets, and we're going to want to see where we're trending on that. Current expectations are for a surplus of approximately $27 billion. We're going to be looking for exports to be up about 10% year over year, which is certainly a nice healthy double-digit number there for the global economy. And then imports actually are expected to rise 26% year over year. So obviously not one set of data is going to be enough to placate the administration, but we will be keeping a close eye on this figure to see what numbers come in and how the market reacts, but both are pointing towards a pretty strong global economy. Moving on, we got Japan's industrial production number. This is a revised number that's going to be out right around 12:30 a.m. The initial figure came in at minus 0.2% on a month-over-month basis, a revised number, so not sure it's going to have any major impact on the markets. Germany will, and that's going to pretty much do it on the Asia Pacific front for meaningful data in terms of the global markets. Moving on to Europe, we're going to have Germany's wholesale pricing and inflation numbers due out at 2 a.m. Looking for a growth of about plus 0.4% on a month-over-month basis. I'm sorry, one thing to just go back on, we got money supply and new yuan loans are expected to come out tomorrow. That's not a specific calendar date on those, so they tend to be a little bit more moving, but the new yuan loans are expected to grow at 1.5 trillion yuan, which is a really healthy number, obviously. So that's a figure that we're going to want to keep a close eye on. And then, sorry, now we're going to move back to Europe. We're also going to have the European finance ministers meeting. So just looking for any commentary from there, around the Eurobond potential or around any changes to the debt to GDP numbers that we've been seeing a lot of, or the budget budget as a percentage of GDP as well, which obviously with the Italian budget has become a key issue in the markets there. So some meaningful macro reports and data points to keep an eye out on. We'll certainly provide an update as they come out and some color on any market reaction we see to them. But perhaps more than anything, we're going to be most excited about finally getting some decent earnings in. So we're going to bring Scott back in to discuss this. Scott, you with us? So obviously a pretty big focus on the financials for tomorrow. As Scott was saying, I posted some earnings previews for the JP Morgan and Wells Fargo, and Carmine did one for for JP Morgan and Citigroup. Carmine did one for Wells Fargo, and I believe he did one for PNC. Here's the scoop for what we're going to be looking at. I mean, you don't really trade earnings off their fundamentals per se, at least the immediate reaction. They usually don't move a lot because there's a lot for market participants to digest. So it's usually pretty helpful in a trend trade in terms of getting a longer swing trade into the next quarter. But for it to be day traded at all or anything like that, I wouldn't really be putting too much focus on that. So if you're looking to trade on the fundamentals, I would be more of the mindset that you want to break down the data, and I'll be breaking down the data for the bigger names. Am I keeping you up there, Scott?
Oh, sorry, did I? was that out loud?
It was out loud. But I won't take it personal. Sorry. But so anyway, you don't want to just look at the headline number and trade it. There's way too many moving parts. I tried laying out some of the key metrics that we're going to be keeping an eye out on, and I'll be doing follow-up commentary with any thoughts about potential trades off the fundamentals. But we're going to want to keep an eye on loan growth to make sure that that's trending in line. That's obviously going to be a primary tracker for the top-line revenue growth. And then we really need to keep a close eye on net interest income and net interest margins and return on equities, because as we know, the concern around banks have been around the flattening of that yield curve, and this is where weaker profitability despite a more favorable tax environment and rise in interest rates will really play in. So we want to keep an eye out on those figures, and I'll break them down as they come out. But the bottom line, on a fundamental basis, you don't want to just be trading them off a headline that you catch on the report. For instance, if JP Morgan beats by 16 cents on something, because there's always a chance that there's some noise behind it and some one-time items. But more importantly, there's a lot more to the story. These are basically like 5 companies coming out and reporting all at once when you break down each of the different segments. So again, we'll have a lot of follow-up color on them. I definitely recommend going through the earnings previews if you're interested in trying to trade these and taking a look at some of the key metrics. But as I just laid out, there's some of the ones that we're going to be taking a look at. And then we're just going to go through and take a look at the charts for each one of these now with Scott. Now, first, we'll just go in alphabetical order here, Scott, and keep it simple. But we'll take a look at Citigroup first. Now, remember, this Citigroup has a lot more international exposure. About 51% of their revenues are generated overseas. So there tends to be a lot more noise around these, a lot more FX exchange rates that you have to deal with. But fundamentally, this is still very favorably valued, and it's been cutting out a little bit of a bottoming pattern in this 65-68 area. Still a big fan of it, still holding a full-size position. I did take some off in the high 70 area earlier on this year, but obviously it hasn't been able to regain its 200-day moving average. So, Scott, what are you looking for this stock to do in order for you to get a little bit more interested in it from a technical basis?
Yeah, so I think the key thing that you just mentioned there was that these stocks, they really don't gap a lot on their earnings report. So that's really the key thing to kind of pay attention to there. I just looked back on like the last year or two at these earnings dates, and both Citibank and JP Morgan, they don't gap up or down for more than 1% from the prior day's close in response to earnings. Now, what they do thereafter is obviously going to be way more important. And usually the move that happens thereafter, depending on how the day plays out, whether it's a reversal or whether it's a continuation, that tends to be almost a multi-day move. So that's something just to kind of keep in mind there. As for Citibank, like you said, so financials have been underperforming year to date. They're actually a laggard sector. Citibank's trading below the 200-day moving averages. It's kind of trying to get back above the 50-day moving averages for the first time this week since May, actually. So it's been an underperformer. There is this downtrend line that goes that you could probably connect off the January highs and the May highs. And if price can start trading back above, say, $69, $70, then I would suspect that things are turning around and we're going to start seeing money flowing back into the sector, into this underperforming sector. But otherwise, if it can't get back above 69, 70, then we could possibly be looking at a little bit more of a slump back towards those early June lows, late June lows around the 64, 65 area.
All right, next up, we're going to move over to the bellwether of the group, JP Morgan, and this is an interesting one because it's coming up testing that 200-day moving average.
And the 50, yeah.
And the 50, not too far above, and I mean, the 100's not all that far away either, right? So certainly some heavy lifting for it to do, and this is one of the better reads for how the economy's performing. Obviously, it trades at a premium, particularly when you compare it to Citigroup on the book value, the book value on there. But there's a reason why JP Morgan tends to be one of the best performers each quarter. So, we're going to be keeping a close eye on this one as it does its 200-day, because this could really be a direction provider for the markets, and we're going to want to keep a close eye on fundamentals, as that gives us a really nice read into the fundamentals for the overall economy. But Scott, I mean, obviously bouncing up into some key resistance levels here, so some heavy lifting, and what are some of the signals that you'd be looking for that this thing's going to be out of its downward trend from that late January date and is ready to move back up towards that 118, 120 level?
Yeah, let's get through these 50-day moving averages around 108, 109 area. Obviously, if you start pushing back over 110, that'll be the key signal that money's flowing back into this group with broken down trends in effect there. If it can't get back over that let's go with 108 to 110 area, well then maybe things will slump a little bit back towards these late June lows or early July lows. But yeah, that's the key thing. And again, this stock does not tend to move more than 1% in either direction. So again, there's really no rush to be getting involved in this name. Let it play out tomorrow, whether it opens 1% lower, 1% higher, and then see where the market takes from there. Then you could kind of get a better assessment where to jump on board.
All right. Next up, we're going to be looking at a regional here, PNC Financial, which has recently bounced off that 134 area. We've definitely seen a little bit of buying going into these earnings reports. PNC is going to be a little bit different from JP Morgan and Citigroup, as they don't have that trading revenue there. So this is going to be a little bit more of a pure read on credit cards and mortgages and the overall lending environment and commercial real estate. So again, saw a little bit of buying as this is coming up more towards the upside of that downward trend channel that we're looking at right now. So Scott, again, what are you going to be looking at from PNC here?
Yeah, this was probably the weaker out of the bunch that are reporting, and
you think this looks weaker than Citigroup?
Yeah, it's already down. It's ever since it broke down in late June underneath that 140 level. This is well below the 50-day moving averages, well below the 200-day moving averages. When you start to get that far away from them, sometimes that can lead to a snapback a reversion to the mean type of trade. But again, with the earnings wild card, I'd like to see this get back above 140 in order for that snapback to happen, which could take it up to like the 144, 145 level.
Right into that 200-day, right?
Right to the 200-day, right around the 50-day.
And that also matches. Now, would you have that as the top of your channel for the
that's
downward?
Correct. That's correct, the multi-month downtrend there. So it definitely, this is why I'm saying it's a little weaker. It seems to have a lot more resistance to fight its way through. And again, that's only going to get triggered if it starts trading up back over 140. To the downside, again, same thing. We have the recent lows right around 134, 135 that has to hold.
All right. And then finally, we're going to bring in Wells Fargo. Which, now this is, again, testing its 200-day moving average. We've seen it as one of the weaker names, but, I mean, this is kind of a special performer here, as they've had a lot of regulatory concerns, a lot of issues with their sales practices that have been well documented within the press. However, it seemed to have found its support at that 50 area. It's broken out from that downward trend now. I mean, it's still kind of going in a little bit of a sideways direction, held up in that 52 to 56 area at the moment. Much like JP Morgan coming in to test its 200-day ahead of the report. There's probably some lower expectations for this one, just because Congress did cap the amount of loan growth that they could do here. So from a fundamental perspective, they could be, people are probably looking at more like, as long as it's okay, people would be a little bit more comfortable with it. But now, would you consider that a bit of a head and shoulders pattern going on there, Scott, or is it a little bit more difficult to judge that because of some of the extreme fundamentals that have been surrounding this one with those regulation issues?
You mean over the last year or so?
Yeah, like going back from May.
Yeah, it's a complex head and shoulders pattern type of trade. Like you said, there's been a lot of issues surrounding this company, and so taking that into account, it still does have its longer term multi-year uptrend still intact above the $50 mark, which again, given the fact that this thing has a couple of issues to deal with as of late, it's holding up really well. So I would say, just based on that, the fact that this has not been really kind of been taken to the woodshed and been in a massive downtrend, and that it has been defended by buyers.
Well, it did go from 66 to 50, right?
It did. So yeah, and it's been probably one of the reasons why the sector's been underperforming for this year. But I'm still thinking it's held up pretty darn well for a name with a lot of issues surrounding it. So short term, you wanted to get back above the $57 area, which is recent highs. Maybe that can bring into the $60, $61 area in due time. But for the most part, as long as the stock continues to remain, say, short term above that recent gap at $54, $55, it's in good shape. If it starts to slip below $54, $55, well, then you're going to be looking at a retest of the low 50s there, probably 52, 51, 50.
Right, okay. And just if anyone's curious out there, for the XLF, JP Morgan is 11%, Wells Fargo is 7.6%, Citigroup is 5.3%, and PNC is 1.98%, so call it 2%. So we basically got 18, about a quarter of the percent of the XLF ETF reporting tomorrow. Mm-hmm. So, keep that in mind. XLF is certainly going to be a little bit more lively given all the weighting that we're going to be seeing out there. And Bank of America is out Monday morning. That's another 8% weighting in that group. So, 1/3 of the XLF is going to be hitting the wires in the next 2 sessions.
And what about, we have Goldman coming up on Tuesday.
Goldman runs at about 2.4. USB's next week. That's 2.4. I mean, 9 of the 10 of the highest weightings. Morgan
Yeah.
Stanley's next week. American
Yeah.
Express is next week.
Yeah.
So the top 10 total weightings of the XLF make up about 54% of it. And outside of Berkshire, we're going to be getting all of them next week. So, I mean, the financials are always a busy contender in the first week, simply because the book is their entire business. So
Yeah.
it doesn't take them a long time to organize everything for them to get rolling and to report the numbers. I mean, they could have probably gone with this on the 3rd of the month.
Just theory-wise, it is summer doldrum time frame. There usually is some sort of summer correction that does happen sometime between July, August, and September. And I would say if financials start kicking things off weak and we start seeing these names start getting pounded back towards recent lows, I'd be really concerned about the broader market just kind of rolling over here. So just something, a potential scenario if that does develop.
Yeah, I mean, that's been my take too, Scott. I mean, I've been saying, like, that 2,800 level, the S&P's, it definitely feels like people are in a, okay, you first mode, and waiting to see some of these earnings come out and for people to jump in and buy them. But, I mean, and I know these certainly aren't bellwethers, but I was real curious to see the response that we saw earlier in the week from AAR Corp, which is AIR, and WD-40, which is WDFC. Both posted decent reports, both reported in-line guidance, and I think guidance is going to be the key. Is not a lot of people are going to want to stick their necks out and provide upbeat guidance. I mean, we even saw it with Delta earlier today, and I'm going to just be real curious to see if people are willing to jump in and buy here, and that's why I've been hesitant to buy, even with us pressing up against these highs in NASDAQ and the S&P. So definitely going to be one of the more interesting earnings season, because I think everybody knows it's going to be good. The question is, how's the guidance going to be, and is it good enough to really entice people off the sidelines?
Yeah. Good stuff, Bev.
All right. You got anything else to add, Scott, or should we shut down here? Or we'll take a quick look, I guess, to see if that Kush Bottles is out. I don't even know what these guys do. I'm assuming they were a marijuana stock. I don't know. But
that's pretty funny. I just assumed they were made like glass bottles for beverages and stuff. I don't know.
I was going off the Kush just from the, let's see, sells packaging products and solutions, offers pop bottles, child-resistant exit, paper exit. So, yeah, they don't do anything all that interesting. Not even sure. Actually, no, they are in the recreational cannabis dispensaries where they make Kush Bottles Inc. So I thought that might have been the case with the name of that company.
I thought you were a total joke on that one. I thought it was more like baby bottle related, but okay.
I was just going Kush from the strain, I guess, but I don't think that they're out yet. And that's the only name that we have on the calendar. So we could do some color on them just in case they're going to be interesting. But our focus is certainly going to be on the financials come tomorrow. And I think this is it's a name that we usually wouldn't cover, but I know that there's some requests given the news that was out earlier in the week on it, and I believe it's a recent IPO, so that's why we got it on the calendar. That's kind of why it was just sticking out for me. I remembered somebody writing in about it. But anyway, we'll keep an eye out on that. Real quick, somebody's asking, have you noticed copper? And we have been talking a lot about copper. I know Brett's been pretty much mentioned on a daily basis, and yeah, we're definitely well aware of its action and its weakness, but I thought one of the more interesting things was the fact that it did see a little bit of a bounce today. Obviously some of the trade wars around. I'll be interested to see when FCX comes out and reports, but I'm kind of a fan of FCX here because I think the sell-off in copper is a little bit overdone, as I think that there's going to be some pretty big shortages in copper, and I think a little bit too much of the story's been thrown around the supply or the demand story, and not enough about the supply, which I think is going to come in and play a major role in it. But we will build upon that copper comment as we go along, with particular focus when FCX reports. But I think that's going to do it for us from here for now. We will be posting this for a replay for anybody that's interested to hear it. We will be looking to post this on a daily basis, to audio for those who aren't around for the end of the evening and would like to, maybe settle down with their dessert and listen to a little bit of a preview for tomorrow and some thoughts on some earners that are going to be coming out, because we are trying to generate a lot of trading ideas for you guys from this commentary. So, Scott, I will talk to you tomorrow then.
Yeah, I'm running the show tomorrow.
You are running the show. Jim will be off tomorrow and Monday, so I'll be sure to pop in, provide as much commentary on the banks as I can. I'll be tied up a little bit trying to listen to some of those calls. The JP Morgan call will be at 8:30. The Citigroup call will be at 11, but we'll have plenty of commentary on the banks, the earnings, the reaction, and how the market's shaping up tomorrow morning for everybody.
Great. All right, Gav, have a good night.
All right, you too. Take care.